Hey guys, a very important video. So let's get straight to the topic. How to draw the Fibonacci properly, or we can also say how to manage the retracements in a structure in a proper way. This is a basic concept you must know before trading SMC. So let's get to the topic. So the first question many are confused about or debating about is what are the levels I should add in my Fibonacci tool, or what are the levels I should remove from my Fibonacci tool. Some people say you should have 30% retracement, which is 0.3. Some say you should have 80% retracement, which is 0.8. And many say you should have the golden zone, that I think it's 0.618. So guys, the correct answer is all you need is the 0.5 input level, which is 50% retracement. That's the only level you need to draw the Fibonacci properly in any structure. So if you are asking, am I telling that 0.618 level, the golden zone in the Fibonacci doesn't work? The answer is no. I'm not telling it works. I'm not telling it doesn't work. But one thing you should understand is whatever happens in the market, wherever the price moves, the only reason that's causing that, the only reason behind that is liquidity. So now if you think to yourself whether the market is reacting to an order block in the 0.6 on golden zone, or is the market reacting to the 0.6 on level itself, the answer is obviously the market is mitigating an order block and only then it's reacting, not for the 0.6 on the golden zone in the Fibonacci. Okay, now let's look at this scenario, this structure right here. If you see closely, it's a pretty simple structure, and we got a retracement, a 50% retracement. The market, the price taps into a 50% order block, proceeds to follow the uptrend, gives us a BOS and breaking this high. So how should you draw your Fibonacci before all this happens? The first thing you should do is validate the highs and lows in any structure you're currently looking at. So to validate a low, you should, it's pretty simple. After a BOS happens, the lowest point, the extreme point in that structure is your valid low. In this case, this is the valid low, as you can see. And to spot and to validate the high, you need concepts like inducement. You need concepts like change of character. But that's for another video. But let's just assume that this is the valid high just for this video. Okay. In the upcoming videos, I'll explain those things. But let's look at fib for this video. So what do? You take out your fib, put it here, draw it from the valid low to the valid high. If it's downtrend, from the valid high to valid low, and then you extend it. So now we have got the perfect premium zones and the discount zones for this structure. So now if you ask me, is the only reason we are using the Fibonacci is to spot the premium and discount zones in the structure we are currently looking at? The answer is very close to an S. Okay, now what happens is pretty explanatory. We take an order block in the discount zone, the market taps, mitigates it, takes liquidity, breaks this high. So now let's look at a slightly different scenario that people will struggle in the live market at. So the same thing happens here. The market comes here, retraces, and slightly ranges between this high and low, and then proceeds to break this high, giving us a proper breakout structure. So what do we do now? We validate the low. So obviously this is the extreme point in the structure. So this is the valid low for us. So the market moves up, and this is the valid high in this structure, and then we get a 50% retracement. So what has changed here, and what you should look for in this scenario? So if you're taking your fib levels, so I'll just delete this. If you're taking your fib level, you're drawing it from the valid low to valid high for this particular structure, you will see you are doing just a small mistake, which is you're forgetting about something that happened within this structure right here. So let's look at what it is. So if you just read between the lines, the market went here and it gave retracement here itself. So if you take out your fib, I mean, let's say this is 4 hours. If you go to the lower time frames, the market has already given us a correction for this low. So once again, the market doesn't have any business coming near this low once again. In maybe in the long term it might come, but for us to look at the trading levels and entry points, it doesn't matter. This is irrelevant. Okay. So the simple thing is just take out your fib, and this is the valid high at this point. I'll just draw that. Sorry. So this is the valid high and this is the valid low. Take out your fib from low to from valid high. As you can see, the market has already given us a correction. So now if you ask me, should I draw the fib from here, the valid low to valid high, or from the point where we have where we didn't get a correction at the current structure, which is this red low right here. From here we didn't get any correction. For let's say if we have got another correction right here, then this would be the point I'll be focusing on, not this one. Okay, this is a very simple concept, but most people complicate it, so it becomes slightly painful. Okay, so this is how you should draw your fibs. You should take it, you should start from here and draw it to the valid high. And if you see, obviously there are order blocks, and this is the order block you can take, and obviously this is the stronger order block right here. But if you didn't do this, and if you drew your fib from the valid low to valid high, you might have missed this entry completely. So this is a correction concept, and you must know this. So let's look at the live markets and I will explain what happened there. Okay. So this is the structure I selected to explain this. A good structure actually. So you can obviously see the market is coming down, a downward trend. This is a BOS. A BOS right there. And the market has retraced, and then once again it gave a BOS right here. So I think I have said this quite a few times, but I'll just repeat this. This is not a BOS. So is this. These two are not a BOS. The true BOS happens only here for this structure. So the price wicks this low, wicks this again, wicks this again, wicks this again, and only then we get a BOS right here. Okay, and the same goes for here. Even if this wick this is the BOS we are getting. So I'm just marking this as BOS, but you should know this. Okay. Now once again we got a beautiful breakout structure right here. I'll just use the replay button. Okay. Now if you have to validate the high, where's the proper high for the structure? Like I said, the extreme point is where we validate the proper high or the proper low. So since the market is in a downtrend, this spot right here, that is our valid high. Okay. Now let's just assume that this is the valid low. Like I said, I will explain about inducement and change of characters and how you can validate the highs and low very soon in the market. I'll explain it in the upcoming videos. For now, let's just say this is the valid low. Okay, again the market wicks this. So now let's say this is the valid low. Let's update our fib. Okay. Now if you look closely in the structure, it's very clear to you that the market has already given us a correction right here. Which means instead of drawing the fib from here to the valid low, if you put your fib right here, you can see the correction is already given. So the market has no business coming to this spot at all. So now you have to update your fib, which means this is the point where you should oh, that's too small. This is the point where you should start drawing your fib levels from here to the valid high. So let's just extend this, and only in this fib level you should validate your order blocks. This is a valid order block right here. So if you don't know how to validate order blocks, how to spot the correct order blocks, I have already made a detailed video on that. Check that out. So let's see what happens. Okay, now the market has given us a 50% retracement level, which means the low which we assumed to be our low is correct. That's the valid low for after the retracement was given. Okay, let's see what happens. Okay, now we went on to get a breakout structure right here. Okay, so what happened here is the market took this entire candle as an order block, and it mitigated that, and it gave us a breakout structure. But that's okay. But now you should understand that is how you draw your fib levels. So let's say instead of drawing it from here to here, instead let's say you drew it from here to here. So now if you look closely, I'll just extend this a little bit. Okay, now if you look closely, yeah, this is a very zoom level, but you get the point, right? The market doesn't even mitigate this this fib level because you drew it. You didn't consider the correction the market gave already to us, which is here. But I mean, even if it tapped into this level, and even if it after tapping gave us a breakout structure, still it's not still that doesn't mean you have did the right thing. Okay, always look for the correction, and only after the correction draw your fib levels accordingly, like this. Okay, now we should ask ourselves a $1,000,000 question. Okay, this is all okay. This is the correction and non-correction concepts of drawing fibs. It's okay. Now, what if the market doesn't give me any type of correction? So let's say even after you take this structure, even after you draw from this point to this point, let's say the market doesn't give you a correction. The market just gives a small pullback like this, and then it breaks this and gives us a breakout structure. So what about this, if you ask me? And we have a very simple approach for this. So if this happens in the market, you should mark this as a weak structure. I will mark this with blue. So this is a weak structure in the market. So even if it doesn't really have to give us a breakout structure, right? Even if it just wicks this top, this high here, this high right here, you should always note that this whole structure is very weak, and the market is accumulating liquidity. And the market is accumulating liquidity. What's this? Oh yeah, the market is accumulating liquidity using this, and there's a tons and tons of liquidity below this. So what the market does next is it takes this high, makes this as an inducement point, comes down here, mitigates this inducement, mitigates this order block right here, and then it proceeds to go up. So when it doesn't give a 50% retracement, you should be very cautious while trading in these type of structures. I took a live entry in the market, and I will explain using that. Oh, I have a lot of drawings, so it's pretty slow. Okay, we're getting somewhere. Okay. Okay. So I took this entry on the date of not here, yes, here, this one. So on the date of 11th of December 2024, that's the date I took this entry. So I'll just use this to explain the concept on how you should actually draw the fib properly. And if you do draw the fibs properly, you will get yourself out of lot of stop losses, and you'll get the opportunity to get the best out of the market. Okay, I'll just use the replay here. Oh, it's too glitchy. I think about 2000 drawings, so probably that's why it's glitchy. Okay. Now if you can see, the market has given us a breakout structure right here. And what do we do now? The first thing we do is mark the valid high or valid low. So the extreme point is this one right here. So that's our valid high. Okay. Now let's see what the market does. All right. So we got a breakout structure, and this seems, we can just assume this as a valid low. It's okay. And we can take out our fibs. And so if you look closely here, you can see the market has already given us a correction. Oh, sorry. The market has already given us a correction, and only then it came down. So you should not start drawing your fib from this point. Instead, you should draw it from this point. I mean, it's just a tiny, tiny gap, but you should always consider and do the right things in the market. So this is where you should draw your fib from. Let's put it at the valid low right here. Okay. So now let's see what happens. If you're wondering if the market gives a correction for this structure right here, it didn't, because if I take my fib and draw it from this this high to this low, you can see the market did not give us a correction. So which means the market has a higher probability of coming up. Okay, now let's see what happens. Okay, the market has still not tapped into the 50% retracement zone. So let's just draw our order blocks, our valid order blocks right here. This is a pretty good order block, a valid order block, and of course the extreme order block right here. Okay, so now let's see what happens in the market. Okay, now if you see here, the market has swept. It didn't give us a breakout structure. There's only a wick, but still we can count on this because we didn't get the proper 50% retracement right here. So now what did I say? We marked this as weak structure right here. That's a weak structure, and the reason is no retracement. So now let's take the fib and let's put it here, because the market has updated, right? We should also keep on updating our fibs. Now let's see what happens. So there's a very high chance the market is going to smash this high and take all the liquidity and mitigate it. So let's see what happens. So as you can see, the market completely obliterated this high, took all the liquidity from there. Okay. So now your chance of getting a very beautiful sell entry in this downtrend has increased because you escaped from taking any entry in this structure right here, because you draw the fib levels correctly. Okay, now let's see what happens. Oh, I went too far. Okay. So the market failed this order block right here, and then it got mitigated in the extreme order block, which is the most powerful order blocks in a structure. So I didn't take this entry actually. I only trade during the session timings. So my session didn't start yet, but I took this entry right after the session started. which is right here. This is where I took my entry, and I put my stop loss about on top of this high. I just put my stop loss as pretty flexible. I don't put tight stop losses. So let's see what happens. The highlighted part, the white background, means my session has started and my session has ended. So obviously this is a winning entry, and it has gone way over than 2.1 RR. 2.1 RR is the place where I fix it, where I close all my trades. I use it as a fixed TP, but obviously the market has given us far more than that. Okay, so guys, this is how you should use the Fibonacci tool and the retracement concepts. So now you know how important it is to draw the Fibonacci properly in the structure you're dealing with at any point in time. You can save yourselves from getting multiple stop loss hits, but at the same time, your win rate increases, your RR increases, and your strike rate increases, right? So let's say you took an entry from this structure right here. Even though if it didn't give us a breakout structure right here, let's just say you took an entry in this structure, even a confirmation entry. Your stop loss, your chance of getting a stop loss increases, right? So that's how you use the Fibonacci properly in the market. It's a very simple concept, right? But people are complicating it. But now you know. So I hope this was of some help. I wish you guys success in trading, and most importantly, I wish you guys peace. See you guys. Good luck.